If you're a UK pensioner, or you've got a parent or grandparent who is, September 2026 is a month you absolutely cannot afford to ignore. Because from this September, the Department for Work and Pensions is rolling out changes that could either put more money in your pocket or take a significant chunk out of it. And here's the thing, whether you end up with more or less depends entirely on whether you know exactly what's changing and how to claim what you're entitled to. This is not one of those "it'll probably affect someone else" situations. This affects you, your neighbours, your family, and millions of pensioners across the UK. Now, I know what you're thinking. Another government change, another load of confusing rules. I get it. The system is complicated, and it's designed to be complicated. But I'm here to cut through all the nonsense and give you the plain English version. September is the month of the qualifying week for the winter fuel payment. That's the week that decides whether you get up to £300 to help with your heating bills. And the rules have changed. If you were born after a specific date, you could miss out entirely. At the same time, the state pension age is going up, which means some of you will have to wait longer than expected to get your pension. And your free bus pass? That's being delayed too. But there's also good news. Pension credit is going up, and attendance allowance rates have increased, but only if you know to claim them. So before we dive into exactly what these 4 September changes mean for your bank balance, make sure you hit that like button. It really helps the channel, and it means you won't miss any of the other important updates we've got coming. Now, let's get into it, because if you're a UK pensioner, this is the most important video you'll watch this year. Let's start with the biggest change, and the one that's going to affect the most people. I'm talking about the winter fuel payment. This is the annual lump sum payment designed to help older people with their heating bills during the winter months, and for winter 2026 to 2027, the rules have changed again. You might remember the chaos last year when the government tried to means test it. Well, that's gone. From winter 2025 to 2026 onwards, all people over state pension age are again eligible for the winter fuel payment. But there's a catch. If your individual taxable income is over £35,000, you'll have to pay it back through the tax system. This is called the Winter Fuel Payments Charge, and it's applied to individuals, not households. So if only one partner in a couple has taxable income over £35,000, only that person's share will be recovered, and the other partner keeps their payment. The government says this means over 3/4 of pensioners will benefit, but here's the detail that could make or break your eligibility. The winter fuel payment is tied to state pension age and something called the qualifying week. For winter 2026 to 2027, the qualifying week runs from the 21st to the 27th of September 2026. To be eligible for the winter fuel payment this year, you must have reached state pension age on or before the end of that qualifying week. And that's where the birth date comes in. Because the state pension age is currently increasing from 66 to 67, not everyone who's approaching retirement age will qualify. The Department for Work and Pensions has confirmed that a person needs to have been born on or before the 27th of June 1960 to have reached state pension age by the end of the qualifying week on September the 27th, 2026. So, if you were born after that date, you will not be eligible for the winter fuel payment this year. Let me say that again. If your birthday is after the 27th of June 1960, you will not get the winter fuel payment for winter 2026 to 2027. It's brutal, but it's the rule. Now, if you do qualify, how much can you expect to get? The amount depends on your age and your living circumstances. If you were born before the 28th of September 1946, you could get up to £300. If you were born between the 28th of September 1946 and the 27th of June 1960, you could get £200 if you live alone, or £100 if you live with someone else who qualifies. And if you're 80 or over, you get the top rate. Most people will get the payment automatically. The DWP sends out letters in October or November telling you how much you'll get, and payments are usually made in November or December. But if your income is over £35,000, you can opt out if you don't want to pay it back later. There's a tool on the gov.uk website where you can check your eligibility and see how the charge would affect you. And remember, once you opt out, You won't receive the payment in future years unless you opt back in. Now, the second September change is related to the winter fuel payments qualifying week, but it's something that's going to affect a lot of people in a different way. I'm talking about the state pension age increase that's currently being phased in. The government is raising the state pension age from 66 to 67 between 2026 and 2028, and this was brought forward by the Pensions Act 2014. But the increase isn't happening all at once. It's being phased in monthly increments for people born between April 6, 1960 and March 5, 1961. Instead of reaching state pension age on a specific date, people in this group will reach their state pension age at 66 years and a specified number of months, depending on their exact birthday. So what does that mean for September? Well, if you were born between September 6, 1960 and October 5, 1960, you are going to face a 6-month wait before you can claim your state pension. That means your state pension age is 66 years and 6 months, not 66. And it gets longer the later in the year your birthday falls. Here's the full timetable for those affected in the coming months. If your birthday is between September 6th and October 5th, 1960, you'll reach state pension age at 66 years and 6 months. If your birthday is between October 6th and November 5th, 1960, it's 66 years and 7 months. November 6th to December 5th, 1960 is 66 years and 8 months. December 6th to January 5th, 1961 is 66 years and 9 months. January 6th to February 5th, 1961 is 66 years and 10 months. February 6th to March 5th, 1961 is 66 years and 11 months. And if you were born between March 6th, 1961 and April 5th, 1977, you won't get your state pension until you turn 67. That's a massive delay for some people. Now, I want to pause here because this is something you can't afford to ignore. If you're in that group and you've planned your retirement around getting your state pension at 66, you need to go back to the drawing board. You need to look at your savings, your other income, and see how you can cover that gap. And it's not just your pension that's delayed, your free bus pass is delayed too. In England, eligibility for a free bus pass under the English National Concessionary Travel Scheme is tied directly to state pension age. So if you have to wait longer to get your state pension, you also have to wait longer to get your free bus pass. The Department for Transport has confirmed this. So that 6-month delay means you're paying for bus fares for an extra 6 months. For many seniors, that bus pass isn't a luxury, it's a lifeline for getting to the shops, to the doctors, to see family. This is a double whammy for those affected. But there is some good news. Scotland, Wales and Northern Ireland have separate rules for bus passes. In those countries, free local bus passes remain available to all residents aged 60 and above. So if you live in Scotland, Wales or Northern Ireland, you're not affected by this delay. And if you live in London, you can apply for a 60+ Oyster photo card, which gives you free travel on buses and TfL services before you reach state pension age. There's an admin fee, but it's a way to bridge the gap. But for everyone else in England, you need to check your state pension age and understand that your free bus pass will come on the exact same day. Don't assume your council will just send it. You'll likely need to apply once you reach that later state pension age. The third September change is actually good news, and it's something that could put hundreds of pounds in your pocket if you know to claim it. I'm talking about pension credit. From April 2026, the pension credit standard minimum guarantee increased by 4.8%, in line with the state pension increase. For single pensioners, the guarantee credit is now £238 per week, up from £227.10. For couples, it's now £363.25 per week, up from £346.60. That's an extra £10.90 a week for single pensioners, which adds up to over £566 a year. For couples, it's an extra £16.65 per week, which is over £865 a year. That's a significant boost, and it's already in effect from April, so if you're eligible and you haven't claimed it yet, you're missing out on money that's sitting there waiting for you. But here's the catch. Pension credit is the most underclaimed benefit in the UK. Hundreds of thousands of pensioners who are eligible simply don't claim it, and the government's proactive campaign is trying to change that. Pension credit is specifically aimed at providing additional financial support for older people on a low income. It's a means-tested benefit, so it tops up your weekly income to that guaranteed minimum level. And once you get pension credit, you unlock a host of other benefits: help with housing costs, council tax reductions, a free TV licence if you're over 75, and help with NHS costs. It's the gateway benefit. So, if you think you might be eligible, you need to check. Use the DWP calculator or speak to a benefits advisor. There's no downside to checking because pension credit is a benefit you've paid for through your taxes, and it's your right to claim it if you qualify. And the 4th September change is also good news, but again, only if you know to claim it. I'm talking about attendance allowance. This is a benefit for people of state pension age or older who have a physical or mental disability or a health condition that requires them to need a certain level of care or supervision. It's not about being ill. It's about needing help with daily living. It could be help with washing, dressing, or just needing someone to keep an eye on you for your own safety. And the key thing is that it's not dependent on income or savings. So even if you have savings or a private pension, you can still claim it if you need care. From April 2026, the rates for attendance allowance increased to £76.70 per week for the lower rate and £114.60 per week for the higher rate. The higher rate applies if you need help both during the day and at night, or if you need constant supervision. That's up to nearly £6,000 a year, tax-free. And here's another thing. If you get attendance allowance, you could also get extra top-ups to pension credit, housing benefit, or council tax reduction. So, claiming attendance allowance could unlock even more money. The council in Wandsworth recently urged residents to check if they could claim this benefit, noting that eligible residents who claimed attendance allowance unlocked over £392,000 in annual benefits in just 1 year. That's serious money, and it's your money. So let's tie all of this together. September 2026 is a critical month for UK pensioners. 4 major changes are happening, and whether they mean more or less money in your pocket depends entirely on your situation and what you do about it. First, the winter fuel payment qualifying week runs from September the 21st to the 27th, and you need to have been born before June the 28th, 1960 to be eligible. If you're eligible, you could get up to £300, but if your income is over £35,000, you'll have to pay it back. Second, the state pension age is increasing, and if you were born in September or October 1960, you face a 6-month delay to your pension and your free bus pass. Third, pension credit rates went up in April, and if you're on a low income, you could be eligible for over £500 a year extra. And fourth, attendance allowance rates also went up in April, and if you need care or supervision, you could be eligible for up to £114.60 a week. The message is clear. The money is there, the support is there, but it's fragmented, confusing, and constantly changing. The government isn't going to send a representative to your house to tell you what you're entitled to. You have to be proactive. You have to check your eligibility. You have to claim what's rightfully yours. So here's what I want you to do today. Check your state pension age on the gov.uk website. Check your eligibility for the winter fuel payment. Check if you might qualify for pension credit. Check if you might qualify for attendance allowance. If you think you might be eligible for any of these, get the forms, fill them in, and send them off. There are charities like Age UK that can help you with the forms if they seem complicated. Share this video with your friends and family. So many seniors miss out because they don't have the internet or they're just not aware. You can be the one to help them. You might just be saving them hundreds, even thousands of pounds over the next year. If you've already checked your eligibility or started a claim, drop a comment below and tell me how it went. I read every single comment, and I'm here to help. We're a community, and we look out for each other. So check your dates, know your rights, and claim every single penny you're entitled to. It's your money, and you deserve it. Take care of yourselves, and I'll see you in the next one.